banking giant Wells Fargo is a little bit of hot water again. This is after a new report shows how the company has discriminated against black homeowners that were looking to refinance in order to take advantage of lower interest rates. Now, look, during the pandemic, interest rates dropped very, very low. That allowed millions of Americans to refinance a total of nearly $5 trillion in mortgages. That saved them nearly $3.8 billion annually. So that's fantastic. Look, I'm one of the lucky people. I was able to refinance our home. We purchased it in 2019. We actually saved quite a bit. It was nice. I think our interest rate was halved. And look, we already paid less than we did in rent for an admittedly a larger place than when we were renting. And that was, again, before refinancing. Now we even save even more. We pay significantly less. Now, unfortunately, of course, not everyone has gotten that option to be able to refinance, even if you're a black homeowner. So now, this is, again, forgetting the fact for a second or putting it aside, that there are so many people out there that cannot afford a home. But even the ones who can, many who are black, were just utterly rejected when it came to refinancing, specifically with Wells Fargo. Other banks, not so bad. So let me give you the details on that. Now, Bloomberg, this is, again, reported from Bloomberg. Nationwide, only about 47% of black homeowners who completed a refinance application with Wells Fargo in the year of 2020 were approved. Compared that with 72% of white homeowners, according to an analysis of federal mortgage data. Now, black applicants had a lower approval rate than white ones at all major lenders. Wells Fargo was found to have had the biggest disparity and was alone in rejecting more black homeowners than it accepted. Already, of course, black homeowners are a small minority, about 9% of all homeowners in this country. But when you take half of that, you take about 4 to 5%, and deny them the ability to refinance through Wells Fargo, I mean, that's really messed up. Really, really messed up. Now, this company, they declined to comment, by the way. Oh, no, we don't have anything to say about individual customers. But that said, they did not dispute Bloomberg's statistical findings. But then they say, but we treat all potential borrowers the same. We're just more selective. We're more selective. We select white people more. Oh, well, okay. Well, I mean, sure. Now, an internal review of the bank's 2020 refinancing decisions did say that additional legitimate credit-related factors were responsible for the differences. Yes, we just didn't like the credit of black people, even if they had higher incomes. That comes later. Now, even when selectively, or I should say, taking that selectivity into account, Wells Fargo still had the worst record among major lenders when it came to refinancing by black homeowners, according to the analysis. That's 8 million completed applications to refinance conventional loans in 2020. That's where the data comes from. JP Morgan Chase and Company, how they stack up, of course, the largest bank by assets, actually accepted about 81% of refinancing applications from black homeowners in 2020, compared with 90% from white ones. All right. Bank of America approved 66% of its black applicants and 78% of white ones. Rocket Mortgage, which received 1 million refinancing applications in 2020, more than any other lender, actually had the smallest gap. It approved 79% of black applicants and 86% of white ones. So why so bad with Wells Fargo? Now, again, the question is, okay, well, what if they can't afford to pay? It's got to be income, right? Income. Well, like the industry as a whole, Wells Fargo actually approved a greater share of applications from low-income white homeowners than all but the highest-income black applicants, who had approval rating about the same as white borrowers in the lowest income bracket. So understand, high-income black Americans had the same approval rating as poor white Americans. You would think that that higher income meant, well, obviously they can afford to save money on their mortgage by refinancing to get a lower interest rate. Huh. No, it's not. So again, this is not really income. What we know what it is. Wells Fargo has had a history of racist and unethical practices, and it's been hammered for them in the past. Back in 2012, for example, Wells Fargo agreed to pay more than $184 million to settle claims that it unfairly steered Black and Hispanic homeowners into subprime mortgages and charged them higher fees and higher interest rates. The bank didn't admit to any wrongdoing and said at the time, "We treat all customers fairly, regardless of race." Complete and utter lies, of course, and that's not true. The bank has also settled several class action lawsuits brought by different municipalities claiming that foreclosures during the financial crisis of 2008 depressed property values and that Wells made it difficult for minority homeowners to refinance high-interest mortgages. It still faces others. In one federal case filed last year, lawyers for Georgia's Cobb, DeKalb, and Fulton counties cited foreclosure Wells Fargo had sought in minority neighborhoods as recently as May 2019. The foreclosure files included an Atlanta property with a, get this, 12.125 adjustable rate mortgage. Holy shit. 12%. That's a disastrous loan. And unfortunately, I mean, a lot of you might wonder, well, wait, who would take a 12% interest rate? That's insane. That's higher than many credit cards who already have astronomically high interest rates. Well, unfortunately, and that really kind of underpins how this is predatory towards the Black community. They're steered into these loans saying, "Oh, we can't really give you a better interest rate. I can't have it. We can't. We're just not allowed. I'm sorry. It must be your credit. You just don't have a good credit history. You know, we're just going to have to give you that very, very high interest rate. There's nothing we can do about it." And then they don't allow them to refinance after a certain period of time of making, by the way, on-time mortgage payments. They don't allow them to refinance. And so they're stuck paying that incredibly high interest rate. I mean, it's absolutely ridiculous. Now, even with, and by the way, just to show you how bad it is renting, a mortgage with a 12% interest rate still might be more affordable than some of the rentals you'll see, which shows how utterly disastrous and broken our housing system really is. And by the way, rent doesn't factor into credit scores, and it absolutely should. Speaking of credit scores, the banking industry has also long argued that credit scores, rather than race, but you're going to see, of course, that they're linked, explain any disparities. However, they have lobbied against the release of federal mortgage data that contains those scores. If you include the rental payments, that would actually help people's scores, because you have minorities who actually make up half of all renters in the US and just a quarter of all homeowners according to census data. I don't understand how paying your rent is not a good predictor of whether or not you're going to pay your mortgage. Oftentimes, again, rent is more expensive than a mortgage. And if you can handle the rent, why couldn't you handle the mortgage? And by the way, if you do have a mortgage that's fixed rate under 3%, well, you're doing excellent. You're doing fantastic. If you happen to have bought your house before housing prices exploded, you're also doing great. And understand that there seems to be a lot of luck here. If you're Black, you just happen to not be as lucky. Unfortunately, you might not, have been there at the right time and right place. And really, those are the factors: right time, right place, right bank, right interest rate, and also right skin color. Because if you're Black, you're more likely to be discriminated against. In fact, the 2021 study by Fed researchers, given access to privileged version of the same data used by Bloomberg that included applicants' credit scores, showed racial gaps were largely attributed to those credit scores and the recommendations of automated underwriting systems make to lenders. So understand that there are algorithms at play. These algorithms are programmed and oftentimes lead to racial discrimination in lending and even appraisal. Now, the study looked at both home purchases and refinancing and identified some differences among lenders, but the researchers, however, did not document those. Now, to add on the problems for Black prospective homeowners is generational wealth. You have a typical white family that had 8 times more wealth than a Black one, according to a Triennial Fed survey last published in 2019. And by the end of September 2021, separate Fed quarterly wealth data showed the gap between white and Black Americans had widened by $20 trillion during the pandemic. They have lost a lot of ground. Meaning, look, Black people less likely to be born in the middle class and are more likely to have poorer schools, live in poorer areas, have worse education, worse job opportunities for those areas. I mean, think about it, not having a car, having to rely on public transportation, which is very, very sparse. And that leads to lower income earnings. That means actually having to take out more debt to finance a college education. You have more debt, you have a higher debt to income ratio, you're less likely to get a home loan. And if you're less likely to get a home, you're less likely to build wealth. And if you just manage to get through all of those incredibly difficult hurdles, and you get a nice home, because it does happen, well, guess what? That home might be appraised for even less of a value than your white counterparts. In fact, the Brookings Institution in 2018 did a study that the average Black home was valued at near $50,000 less than the white equivalent. That difference amounts to about $156 billion in missing Black wealth. And a real life example I had covered before, there's a couple named Gwen and Lorenzo Mitchell. That's a minority couple who attempted to get a home equity loan in order to finance a new remodeling project. The appraiser who had visited their home when Lorenzo was there with their 3 young children assigned a value of about $405,000 to the home. Now, that was actually way lower than the prices of homes in that area, and much lower than they expected. A white friend, however, was asked to meet a second appraiser for the same home, except they removed everything that showed that this was a home owned by Black people. So all, family pictures, they had a white friend stand in. And guess what? That appraisal ended up assigning a much higher value, a value of $550,000, a $145,000 increase from the first appraisal. And that's not all. Numerous undercover investigations exposed pervasive discrimination by real estate brokers and agents accused of being steering Black home buyers away from white areas and denying them basic information to make home buying easier. This is the spiritual successor to redlining, which is illegal. There are many banks, unfortunately, that do this, but Wells Fargo, undeniably the worst of the lot. Once again, showing how racism and wealth inequality happen to go hand in hand. The prejudice is baked into the system, and that system needs to change so that everyone can be treated fairly and equally.